Hello everyone, welcome back to my channel. Today we are going to solve ACE and A level MCQ paper from October-November paper to 2022. This is paper 12. So the first question is question number 1. Which item would be entered in the general journal? So we know that there are 6 types of journals: sales, sales return, purchase, purchase return, and cash book, general journal. So whichever entry does not enter in sales, sales return, purchase, purchase return, or cash book will be entered in general journal. So we have the following options. The first one is good taken by the owner for personal use. Yes, this will be entered in the general journal because this is not a sales, nor purchase, nor a cash transaction. Number 2, good purchase for resale, so it will be entered into purchase journal, so it will not be recorded in general journal. Number 3, purchase of non-current assets on credit. Again, this is purchase of non-current assets and it is not a cash transaction, so it will be recorded in general journal. Last one is purchase of office stationeries, which is cash transaction, so it will not recorded in general journal. So the correct option here is 1 and 3, which is option B. Next one, question number 2. Why it is important for a trader to distinguish between capital expenditure and revenue expenditure? Capital expenditure are expenses on capital item. Revenue expenditure are expenses on day-to-day expenditures. So if we distinguish this one, what will happen? Number 1, to apply the realization concept, no. To know which method of depreciation to use, this is also incorrect. And number 3, to obtain a more accurate profit figure. Yes, because it will distinguish which one is your capital expense and which one is your revenue expense. So we can find out what is our correct profit for the year. So the correct option here is option D. Okay, next question. A company purchased a new vehicle for 30,000. It part exchanged an existing vehicle at a value of 6,500, with the balance being paid by check. The part exchange value by vehicle original cost 12,000 and had a net book value of 4,800 on disposal. Which entry will be made in the account? So let's look at the first information given. First one is the cost of the vehicle, new vehicle is 30,000. It will be part exchange for the existing vehicle, and the existing vehicle value is 6,500. So the remaining amount we have to pay from our bank account. So 30,000 minus 6,500 would be 23,000, and it would be reduced from my bank account. So 23,500 credit. Let's look at the second option out here. In part exchange, the original cost of that vehicle was 12,000 and the net book value was 4,800. So it means we are selling it for a higher price, 6,500, and 48,000 minus 6,500 minus 48,000 is 1,700, which is my income. So the correct option is option A. Let's move on to question number 4. At 31st December 2021, a business had a non-current asset with the net book value of 18,000. Is the net book value of 18,000 on 31st December 2021. It had been purchased during the year ended 31st December 2020. So it was purchased last year, and this year in 2021, after subtracting depreciation, the net book value is 18,000. Depreciation is charged at the rate of 25% per annum using reducing balance method. A full year depreciation is charged in the year of purchase. Okay, so we need to charge depreciation in the year of purchase. That means last year in 2020 we have charged full year depreciation. This year also we have charged full year depreciation. So question is what was the original cost of that non-current asset. So in order to do that, what we need to do is we need to find out 2 years depreciation that was provided in this asset, and after that depreciation the value is 18,000. Okay, so in 2021, after subtracting depreciation the value is 18,000. Okay, sorry, what happened here, I don't know. 18,000, and rate of depreciation is 25%. So we need to calculate what is that depreciation amount. We know this amount is after depreciation, so this 18,000 will be divided by 100 minus 25. Okay, and then it will be multiplied by 25. Okay, 25. Now if we do that, then the amount of depreciation in that particular year is 18,000 divided by 75 into 25. Okay, now correct answer is 18,000 divided by 75 into 25 is 6,000. So in 2021 the depreciation amount is 6,000. Okay, so the total value of the asset before subtracting depreciation was 18,000 plus 6,000, which is 24,000. Okay, now in 2020, last year, we have also subtracted depreciation because a full year depreciation is charged in the year of purchase. So this amount is after subtracting depreciation. 24,000 is after depreciation. We'll repeat the same method here. 24,000 should be divided by 100 minus 25, and it will be multiplied by 25 later. So the amount is 24,000 divided by 75 into 25. Okay, so let's see. So the answer or the depreciation is 8,000 in 2020. So that means before subtracting depreciation, the value of the asset is 24,000 plus 8,000, which is 32,000. Okay, because we purchased this asset in 2020, so that means the original cost of the asset is 32,000. Let's go back to the question. Yes, 32,000 is the option here. Option number D. Option D is your correct answer for question number 4. Question 5. Which item is an error of principle? So if you remember the errors, error of principles are those errors which occurs in different class. You wrote incorrect account of different category or different class. Let's figure it out which one is the different class here. Number 1 is no record was made of inventory withdrawn by the owner for private use. This is not recorded, so this is error of omission. Number B, sales return were credited in sales return inward account. Okay, so there is sales return were credited in sales return inward account. So normally when they return sales, it should be recorded on the debit side, but now it is recorded on the credit side. Okay, so this is complete reversal. Okay, number C, the amount shown in the purchase invoice for the goods for resale was incorrectly recorded in the purchase journal. So when you write down the journal entry, if the amount is incorrectly written, then this is the error of original entry. And the last one is the cost of machinery repair. The machinery is repaired but was debited in machinery at cost. So it is an expense, revenue expenditure, but considered as capital expenditure. So it is error of principle. So the correct option is option D. Let's move on to the next question. Question number 6. A sales ledger control account of a business had a balance of 17,640. This did not agree with the total of the individual customer account in the sales ledger. The following error had been discovered. An invoice in the sales journal for 460 has been entered wrongly in the sales ledger as 640. Then there is a credit balance on sales ledger 470 has been omitted from the sales ledger control account. Then discount allowed has been incorrectly totaled as 310 instead of 325. Last one, goods sold to Harry for 690 has been entered in the account of Barry in error. What is the correct balance on sales ledger control account? So what should we write in sales ledger control account? So in sales ledger control account, we'll write all trade receivables and its related things. Okay. So the first entry out here, an invoice of sales journal 640 had been entered wrongly in sales ledger. So it is recorded in the sales ledger and in the sales journal. So from the sales journal, we are assuming that we have been recording this in the sales ledger control account. So this entry will not affect your control account. Number 2, there is a credit balance in sales ledger, okay, which has been omitted. So you did not write it down. So it is a credit balance on the credit side. So sales ledger balance will decrease by 475 if we record this. If we correct this entry, 470, not 75, 70. Then next is discount allowed has been incorrectly total. So discount allowed will decrease your trade receivable balance. We write it on the credit side again. And its amount is 325, but we wrote 310. So there is $15 missing out here. So altogether, yes, $15 here. Now next one is goods sold to Harry for 690 had been entered in the account of Barry. So it's supposed to be recorded in Harry's account, but we recorded in Barry's account. So if you correct this error, then we'll take out from Barry's account and we'll put it in Harry's account. Okay, both of them will appear on the debit side. Now Barry's account will be reduced by 690 and Harry's account will increase by 690. So it will not affect my overall total. So these two things will affect my overall total. So the total balance is 470 and 15 here, 485. 485 will be subtracted from here. So if you subtract 485 from 70640, 485, which is 155. So it is option B. Your correct option is 17,175. Next question. Question number 7. The total on trial balance were debit balance is 500,150 and credit balance is 500,000. Which error could have caused the difference? If you look at the difference out here, the debit balance is overstated or credit balance is understated. So we need to look into those errors which will either overstate the debit balance or understate the credit balance. So number A, option A, a cash sales has been recorded in the sales account. Okay, so a cash sales has only been recorded in the sales account. So it is recorded in the sales account. So on sales account has a balance on the credit side. So credit balance will increase. But here credit balance is understated. So this is not the correct option. Number B, a credit purchase has only been recorded in supplier's account. So when you purchase goods on credit from a supplier, that entry was recorded only in supplier's account. So when we write in supplier's account, supplier account has a credit balance, so it will be recorded on the credit side. So credit side should have been more, but in this case it is less. So this is also not the correct option. Number C, a credit sales has not been recorded. So you sold the goods on credit but it is not recorded at all. So it is error of omission. Both debit side and credit side is understated. And the last one is a credit sales has only been recorded in customer's account. So it is recorded only in customer's account when you sold goods on credit. Customer has a debit balance, so debit side is overstated. So most probably this is my correct option here. Number 7 is done. Next question. Number 8. A draft statement of financial position of a business showed net asset of 600,000. The following items were then discovered. A long-term loan of 10,000 had not been recorded, so it is not recorded. And this was taken on the last day of the financial year. So when you take non-current assets, your non-current loan or non-current liability, this will increase your liability, but at the same time it will also increase your current assets. Okay, so it will have no effect on net asset. Closing inventory has been overstated by 20,000, so it will decrease your net current assets. And depreciation has been understated by 15,000, so it will also decrease your non-current asset. So if I see this, then I have 600,000 here as my balance. There is increase in the liability. Okay, there is increase in the liability, so my net current asset will decrease. But there is also increase in my current asset, because when we take loan, we received money. Okay, so either in the bank balance or in the cash account. Then there is a decrease in the value of non-current assets, which is closing inventory. And there is a decrease in the value of non-current asset in the form of depreciation. So if I do this, then my correct option is 565,000. So the right answer is 565,000. Option B. Let's move on to the next question. Question number 9. A company had produced draft statement for the year. It is then discovered that some inventory is damaged and the value must be reduced. So when we prepare the financial statement, we include the closing inventory, but it looks like that those inventories are damaged out here. Now what effect does it have on the profit for the year and current assets? Now profit for the year will decrease because closing inventory is decreasing. Closing inventory and profit for the year shares the direct relationship, because if you remember, in finding out the cost of sales, we have opening inventory plus purchases minus closing inventory. So if you subtract closing inventory, cost of sales will subtract. Now the cost is less, cost is subtracted from the sales to find out the profit. So if cost is more, like in that case, if my closing inventory was 10,000 before, now it is only 5,000. So I will subtract only 5,000 as my current closing inventory to find out cost of sales. So that means my cost of sales will be more and my profit would be less. In that case, profit will decrease either here or here. So this is my correct option. Now what will happen to my current assets? In this case, current asset will also decrease, because current assets is we include closing inventory in current assets. So the correct option is here A. And then the last one in this sequence of first 10 question is a trader took out a 6% bank loan. Okay, rate of interest is 6% bank loan of 30,000 on 1st November 2021 to be repaid in full in 10 years. So it is a long-term loan now, because we have to pay after 10 years. The interest to be paid annually, no interest has been paid by 30th April 2022. So in 2022, when we had to pay this interest, we did not pay any interest on this loan. So question is, how should this be recorded in the statement of financial position at 30th April 2022? In financial position, how do we record that in statement of financial position? Okay, So in statement of financial position, we'll write down our non-current assets, non-current liability, which is 30,000 here. So either this option or this option is correct. Okay. Then we need to calculate what is the interest of 30,000. 6% of 30,000 is 1800. Let's see. Equals to 30,000 into 6% is 1800. Now this 1800 is for entire year. So in this case, the asset was purchased on 1st November and we are calculating it till 30th April. So from November to April, it is 6 months. So it is 900, half of that. So correct option is option B. Hope you understood this. If you have any questions or doubts, do let me know in the comment section and I'll try my best to answer those questions. These are my first 10 solutions for this question. This is part A. Please stay tuned for part B and part C. Thank you. Have a nice day.